Good afternoon, everyone. Welcome to today's Wednesday market review. My name is Stock Darts, and we're going to do what we do every Wednesday. We're going to go ahead and take a look at the four major markets. We're going to look at the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish looking at the four markets, we'll take a quick look at the U.S. dollar. We'll see how gold, silver, and oil are doing, and then we'll move on to chart requests. Those of you that are in here, if you have a chart request, feel free to type it into the chat, and we'll make sure to allot some time to it. If you're watching a recording of this, you can always follow me at Twitter on Stock Darts, YouTube Stock Darts, or you can visit me at patreon.com/StockDarts. And if you want, you can ask me a question on there, and I'd be more than happy to offer you my views on whatever chart you have a question on through any of those mediums. As well, if you like what you see here, you can always visit me at patreon.com/StockDarts, where you'll find weekly blog content. I typically post watch list ideas and trade ideas on Mondays, depicting my attempt at strategizing how I'm going to trade that week depending on what the market is doing. Obviously, every Wednesday we meet here on Twitch and we go ahead and cover the markets and try to figure out exactly what kind of price environment we're in, and that's what we're going to do today. Alright, so first things first, let's take a look at the S&P 500. And as you can see, we're having a pretty good day today, and the market is breaking out and making their way higher and reaching levels that we haven't seen since February, right when we started this pandemic crash. And it's quite interesting. I know a lot of people are asking me on the sidelines. They're telling me that this is, sort of surreal, how the market could keep rallying despite the fact that, we have half our market burning right now with protests, or sorry, half of our country burning with protests. And we're still in the process of opening our doors after being shut down for a good quarter of the year. But the truth is that we have a lot of stimulus that has propped the market upwards, and on top of that, the market is a forward-looking instrument, and I think at this point it's pretty clear that the market is starting to really price in a full recovery coming into the summer. Now, those of you that are regulars here, you'll know that one of the things we've been looking at, one of the things we've been discussing is this idea that the market has been looking for a ceiling. I still think we're going to be range bound as we head into the summer, and especially as we start to head towards the middle, the second half of this year. And I still think that's what's happening. And when we get to the Qs, you'll see that we've kind of hit what I think is going to be pretty close to our ceiling. So, despite the fact that the market has been very strong, I think we are actually coming very close to a temporary top, and more likely than not, we'll be pulling back in the next couple of weeks. And I will be looking at that carefully to try to decide at what time I want to go ahead and change gears and start trading to the short side. Now, those of you that are on my Patreon, subscribe to my Patreon page, you'll know that this week we were focusing on long plays. We have short plays that we have been putting on our watch lists in anticipation of a potential market reversal, but we're not going to go ahead and do anything along the lines of shorting right now until we see a market start to reverse. And at the moment, we're not seeing that yet. And so I don't want to get ahead of myself and say we're going to reverse, but I think that we've reached the point where we are getting pretty close to finding what I consider to be very strong levels of resistance that should indicate a near-term top, and likely the ceiling for our range as we go ahead and start to explore the kind of price levels that we're going to need to sustain as we start to head into the summer months. So first things first, let's take a look at the S&P 500. We're looking at SPY, the ETF, and as you can see, we've had 4-day run, and actually really the last 6 or 7 days have been pretty much up, even though we've had a couple of red candles. For the most part, they're still what I would consider candles that are moving the market forward. We have reached a pretty important price point here, right around 310, 311. We discussed this last week, as this is going to be an important level of resistance. I think the major level at this point is 320 as far as our price ceiling and what we can probably expect the S&P 500 to not get through. Whether we get to there in the next couple of days, I think is up for debate. I think it's definitely very possible. I think that there's a very good chance that the market tries to explode higher either today in the afternoon or possibly tomorrow. And I expect it to be met with a lot of selling pressure. Now, what makes this level important right now where we are is if you remember, back in February, once we started really getting wind of exactly how serious the COVID-19 situation was, the market started to really break down, right? And we came down and we hit this level right around 295, which is a pretty important level. For those of you that are regulars, you've seen this before, but we take a look at a weekly chart, you can see that this 295 area has been a pretty important ceiling for price action from all of 2018 through most of 2019 and even to a certain extent part of 2020, right? And this was an important level. It was a ceiling which should have turned into support, and that's exactly what tried to happen in February. We go back to the daily chart, and we'll see that that's where we tried to find support. We dipped below it, and then we came right back up and tried to trade above it. And you can see we developed this nice little bear flag. And then that's when we really started to break down, and that's when things really started to accelerate to the downside. Once we realized that this bounce wasn't going to hold the markets, and we've made our way right back to that price point, right? And so we're coming pretty close to basically erasing all of the drop. Not that much more to go to start reaching the levels that we were at in February and January of this year. And so I think at this point we're starting to reach the points where the market has kind of come back to quote-unquote break-even, right? A lot of times when you look at charts, not necessarily the markets, but when you're looking at stocks, you try to figure out where is it that people would get back to break-even, right? A lot of times traders end up holding the bag, and they hold a stock, and then once it drops, they basically just wait till they can get back to break-even, right? And I think that this is the break-even point with a lot of respects. If you're just looking at the market as an average, we're reaching the point now where a lot of traders are getting back to break even. Not necessarily on SPY, although that's what the stock or the equity we're looking at the moment, but just generally speaking, a lot of people are getting their accounts back to almost break even with the move that we've had and the recovery that we've had. And so this is a point where a lot of people decide to start saying, well, you know what, I don't want to get caught on this if it starts to drop again. And so you start to get some selling pressure that builds up, and that's what happens a lot of times once you reach back and you bounce and you come back to these prior levels. And that's why they have price memory. There's a lot of traders here that are looking at this and saying, well, we couldn't sustain price action back in March. Why are we going to sustain it now? You know, and that's what becomes the reason for traders to start trying to sell at these levels, and why a lot of distribution, a lot of supply starts to pop up at these previous price points. And so this becomes an important price level. I don't think it's the major price level. I think the major price level is 320. I think 320 is kind of the demarcation point between a market that was in a good state and a market that started to realize that we were going to be closed for a while, and people were going to have to start working from home. And I think that's what really happened here, and that's what we've kind of come right back to. And the question is, are we ready to move forward? Now, if you look at the market, and like I said, we went over this in detail last week, the undertones of the market and how it was beginning to price in an economy that was getting back to normal. We were seeing a lot of different areas of the market that was being hit hard in February, March start to recover. Stuff like oil, stuff like retail stores, restaurants, they were starting to really pick up some steam, and that's actually some of the stocks that have been continuing to move this week. And until we see money rotate back out of them, I think that we're going to continue pushing upwards in the market. All right, so as far as the S&P, the levels, like I said, we are looking at 320. I don't expect us to push through that. So I think that as we move forward the rest of this week and into the start of maybe next week, we should start to anticipate some reversal candles somewhere between where we are now and 320. We may not make it all the way to 320. We may make it to 320, but somewhere in here, whether it's today and tomorrow, or whether it's Friday or Monday of next week, we should start to see some reversal patterns develop here. And I think that will be a good indication that we're finally starting to hit these supply levels that we probably don't have enough buying to push through. Now, I'm not going to just short if the market hits 320, or if the market, whatever level it is that you're looking at, don't just short it because the market hits it, right? You still want to see a reversal pattern develop. You still want to see something that gives you a good trade setup. Because the truth is that the market right now is still pushing upwards, and until we see a change in character, you don't want to be the first one to jump in. You just want to make sure that you react to the market once it gives you what you're looking for. Because there always is the possibility that the stimulus that we have in place is strong enough to just push the market back towards its February and January levels, and we start to push through, as we see on the cues, which we'll get to in a minute. Now, to the downside, what happens once we do reverse? Obviously this rally is starting to get a little long in the tooth. If you come all the way back and take a look at where we were in March, we've kind of gone almost unimpeded straight up back into the 300s, right? We've had a couple of selling days. I don't think we've really had more than 3 days in a row of selling. Maybe 1, 2, 3 over here, 1, 2, 3 over here, And so for the most part, the market has been very strong, and the sellers really have had very little impact. And I think at this point, this rally, in my mind, is starting to get a little long in the tooth. And I think we're reaching a point where we should start to see more selling pressure come in. Once we do reverse, what are the levels we can look at as support and we can look at as buying opportunities? Because again, I think at the moment the market is so strong that there are buyers that missed some of this that are waiting to come in, and that's what happened last week and even the week before that. So the levels that I would consider to be strong levels right now, 295 is a very critical point, and I think at this point, the first time we come back and test that level, it should be a good support area and should be a really good spot for people to go ahead and try to buy the dip and try to play to the long side. If indeed this whole COVID-19 thing is behind and in the rearview mirror, if that is indeed the case, then 295 should be the floor. Because we were past that level at the beginning of the year and basically at the end of last year, and if the market is as strong as it's indicating right now, whether it's through stimulus or whatever it is, then this should be a good floor. If we lose 295, I don't think it's the end of the world. I think it just means that we got ahead of ourselves at the start of this year, and that the market is still really in the same range that we were in 2018 and 2019. If that's the case, then once we lose 295, we should probably look at a move back to the 50-pair moving average, and maybe even all the way back down here to 273, 274. And that's going to be major support as well. I don't expect a return back to the lows of this year. Not unless we get some seriously bad news, unless maybe with all these riots we have a big explosion in coronavirus new cases, and it would have to be really big in order to push us back down to the lows. However, I think that there's probably going to be a resurgence in the virus, and that's probably going to lead to what is likely going to be a short-term top for us, and start to let the market start to head back southward. And like I said, I think the key right now, 300 to 295, that area right there is going to be good support, and that should be an area to go ahead and buy the dip. And if we lose that, I think that there's potential for a move all the way down to 274, but I don't think that's going to happen from here next week or even the week after that. I think that's something that will probably occur sometime in the middle of the summer as we start to go range bound. Like I said, I don't think, and again, I'm going to go back to the weekly chart for this. If you take a look at it, I don't think that we're just going to go straight back to new highs and start to rally again. I think that the market, despite the fact that the Qs are already basically at all-time highs, I don't think the overall markets are really ready to get back to new highs. I think that what we're going to do now is we're going to just basically start trading sideways and start to build up, try to figure out exactly where we are and build up a new accumulation base that can maybe start to push the market upwards, or even maybe roll over at some point later in the year. But for now, as you can see, we've had a strong recovery. I think it's a little bit even more exaggerated on the weekly chart, where you can see just how quickly we've shot straight through an entire base of price action. And so the key right now is eventually we will reverse. When we do, is this 295 area going to hold? Or are we going to come right back towards the middle of that base and trade towards the middle? Or do we come all the way back down to the bottom? Now again, I think if we come back down to the bottom, it's not going to be one quick move. I think it's going to be a case of gradual back and forth where maybe we come back and test 295, try to bounce and fail, then come back in, test 275, then come up and bounce, and then maybe hit resistance again, and then come down. I don't think it's just going to be a straight one shot all the way back to 255. So generally speaking, if you're long right now, I don't think you have to worry too much about a second crash coming or a market coming back and retesting lows. I think at the moment we've shown enough strength to establish that at the very least the market is range bound and is going to be trading in the same range and the same price areas that it was last year. And as you can see, we were already building up a lot of strength last year to break out to new highs. And so if the market is indeed back to where we were last year, and again, I don't think we are, then we shouldn't lose 295 and we should stay above that level for the rest of the year. Personally, I think that we are going to come back and test 295. It should be a good level to buy, and then as we bounce off of that, we'll see exactly how strong the market is at that point. So those are the levels. I think from here to next week, if you're trying to, if you're a shorter term swing trader like I am, you're trying to gauge exactly where the levels of support or resistance are. I think we have major resistance at 320 that I do not expect us to break from here to next Wednesday. And I do not expect us to lose 295 from here to next Wednesday. So we should be somewhere in the middle. I know that's kind of a wide range. Generally speaking, I think that we are still making our way upwards. and I'm expecting a reversal pattern somewhere in that level, which should eventually lead to a pushback down to, at the very least, the 200-period moving average. And so that's the way I'm approaching the markets right now. Now, again, I've been long for the most part this week, and I will continue to play to the long side until I actually see signs of reversal. Now, we look at the Qs, you see a very strong market, right? And this is something we discussed last week, and I think even the week before to that. I think the Qs really want to test all-time highs. Obviously, at this point, it's a foregone conclusion. We're basically less than a point away. Um, and I think this is one of the key things that I've been watching over the last couple of weeks, waiting for a market reversal. Um, like I said, I think what the market is doing right now is trying to figure out where the ceiling is, where we're going to find too much selling to be able to push through. And I think that's coming very quickly. I think that's going to be right around all-time highs. More likely than not, we're going to print new highs on the Qs. It's probably just going to be just dip right over that. And then I'm pretty sure that we're going to reverse at that level. Now, I'm not 100% sure. No one ever is. There's no way you can 100% predict what the market's doing. But what I'm seeing here and the way I've seen the market behave, I know that the Qs have been just really ramping up to try to hit that level. And we're right there. We're really, really close, and I expect to push towards the end of today or tomorrow to try to get the NASDAQ above that level. And once that happens, I think that's when we really see whether the market's ready to reverse or not. If so, we'll see some kind of shooting star. We'll see some kind of bearish engulfing candle over the next couple of days. And we'll see maybe a break of some of these rising trend lines, right? You can see right now the way the Qs have been behaving. We were channeling upwards, then we kind of accelerated and kind of put our pedal to the metal here and started pushing upwards. And so the first thing will be for the Qs to lose this upwards bias and start to come back. Now, I think for the NASDAQ, one of the keys is going to be this 20-period moving average. We're kind of far away from it right now. We're going to eventually reach a point where we reverse. And when we do, we're going to come back and test the 20. For those that are looking to short, I would stay away from shorting the NASDAQ or shorting tech names. If you see something like this that you want to short, I think that probably the signal you're looking for is a move back below the 20. Because more likely than not, the first pullback is going to be bought up as it comes up and hits some of these sentiment indicators showing just how strong and bullish the NASDAQ is. You can see we filled a gap that was pretty critical, that really was created during the first real beginning of that pandemic crash that we had. And we're right back, like I said, to the levels that we were prior to the whole coronavirus thing starting. And, a lot of this is because some of these tech names have been pretty well insulated from our workforce having to stay at home. A lot of tech names directly benefit from our population shopping from home or working from home or spending their free time watching Netflix or playing video games. That kind of stuff. A lot of these tech names have actually benefited from that. And that has kind of led this recovery, and that's one of the reasons that we've moved so quickly on the Qs is because a lot of their names, stuff like Zoom, stuff like Citrix, Amazon, Netflix, Activision, they've all been pretty well insulated. If anything, are actually thriving and benefiting from us staying at home this long. And that's part of the reason that the Qs have done so well. We noticed last week there was a bit of a change in character where some of those names were starting to underperform, and a lot of the weaker names that were in, say, the Dow Jones or the Russell 2000 have started to improve. A lot of industrial names and a lot of names that maybe were hit harder during this crisis. As you can see, looking at this, you'd say, well, yeah, the NASDAQ is still relatively speaking the strongest, but if you look at the percentages today, the Qs are only up 0.2%. IWM is actually up almost 3%, right? So this pattern is still persisting of money rotating towards the more beaten up stocks and away from the stronger stocks. And I think that that's something that we've seen over the last 2 or 3 days. There's been a lot of catch up between the Dow and IWM trying to catch up to the Qs. And so the Qs, even though they're inching up towards all-time highs, over the last week they've shown a decrease in momentum. And I think that this is one of the reasons that I'm expecting us to finally roll over once the once the NASDAQ actually prints new highs. So this is going to be one of the key areas that I'm watching over the next day or two, is seeing how we behave as the NASDAQ hits new all-time highs. If we continue rallying through to new highs, then I'm not going to short. I'm not going to go long either because I don't like the risk-reward at these price levels as far as the tech names are concerned. So, that's going to be one of the things that I'm watching. If we do roll over, if we finally get some selling pressure on the Qs, like I said, the first area of support is going to be right around the 20-period moving average, which is probably going to coincide with this rising trend line. If we falter and continue to really sell off, then the really important price point for the NASDAQ is right here around 218. Likely the 50-period moving average is going to come up and meet price right around that level. And like I said, that was at a critical point in the market back in February and March, where that was when we broke down and kind of came back up and tried to stabilize. A little bit different from where the S&P 500 is right now. Relatively speaking, the S&P 500 is trying to break above this point, while the NASDAQ is well above it. And it's going to use that as a floor once we come back down. So for those of you that are looking to buy a dip, you've been waiting because you're not happy with the way this market is, the risk and reward this market has presented you. Well, if we do start to sell off, then this is a good spot for you to start looking at buying a dip and start to look at buying some of these names that you feel like you've missed out on once they come back to basically the same sort of levels as the Qs are right around 217. I don't think it's really necessary to look at levels below that because I think that's going to be a good spot for us to support. But if for whatever reason we really drop below that, the 200-period moving average and this level right around 205 to 207 will be the next key area for support on the Qs. All right, now if we look at the Dow, we'll see again, relatively speaking, in the long term, much weaker than the Qs, and to a certain extent even weaker than the S&P 500. Very far away from all-time highs, which is understandable and expected. I think the Qs are really the one that's kind of a little bit of an aberration here, as they're the only ones that are at new all-time highs. Everything else, or reaching new all-time highs. Everything else is kind of just making up ground and trying to get back to the ceiling of the price range that we've spent the last couple of years. You can see the Dow Jones again, lagging a bit. Not back above this level around 265 or so, which is really important in the long term. And that should be one of the levels that I'm going to look at as resistance as we come up on the Dow Jones. You can see our February level, this 283, pretty far away. Our bounce back in March is what we're trying to come back up to. And I think if we do push through, you can see we're right at the 200-period moving average, which again should be strong resistance. So if we can break through this resistance, we've got more resistance right overhead. If we break through that resistance, we've got even more strong resistance overhead. So generally speaking, even though we're pretty bullish over these last 3 or 4 days, I think that we're reaching a point where there's not that much. I don't think that there's going to be enough strength to push through all these levels that we still need to get through on the Dow Jones. So I like the strength. I like the fact that it's playing catch-up. But I don't expect that much more from the Dow Jones. So much like what I've said with the S&P 500 and the NASDAQ, I don't think I'm ready to short because, again, the market is very strong. But I'm reaching a point now where I'm getting very, very cautious about what longs I take, and I'm only buying longs that are at support and are playing catch-up with the markets. And I'm going to be quick to take profits as we hit these levels of resistance because I find it's going to be difficult for the market to keep pushing upwards through where we are. I think that we've reached the point now where we're starting to find where the ceiling is going to be. And it doesn't mean that we're going to top out and head back down to lows, but I think we're reaching a point where we should find a top and then start to trade range bound. So Fat Boys, if you're on Twitch, there should be a chat message, like a chat bar. I don't know. I think you might have to actually have an account with Twitch. It's free. I don't think you could type in the chat if you're just a guest. But if not, there should be some kind of a drop down somewhere that opens up the chat bar. Okay. All right. So I'll go back to your Twitter in a second if you can't figure out where the chat is. But there should be a chat there. But I think you need to be registered. I don't think you can just do it as a guest. Okay. All right, so where were we? The Dow Jones trying to hit resistance. I think if we do pull back, like I said, I think it's just a market that's going to be range bound. And so there's going to be, I think our pullbacks are going to be bought. As you can see, this level around 247 to 250 should be very strong support. and that should lead to a good buy the dip opportunity. You can see the 20 and the 50 pair moving average starting to curl up, and that should be a good spot to offer support once we do finally start to see sellers impact the market. Um, there's not that much more I want to say about the Dow. I think the Dow is very similar to the S&P 500 and the Nasdaq, um, and I think that for the most part, a lot of the analysis I just said about the other two basically is the same for the Dow Jones. By the way, are there others in here? I know obviously you're not going to be able to interact with me on Twitch, but are there others here that are having trouble with finding the chat bar? If you can't find the chat bar here, you can send me a message on Twitter as well, and let me know, because a lot of times I find it kind of curious that there are a lot of people in here, and very few actually ask me for tickers, and I'm not sure if it's maybe that people can't find the chat menu on here. Let me see if I just typed something in the chat, see if it pops up anywhere for you guys. But let's take a look at IWM. Let's take a look at the small caps. Oh, Ray, you say you cannot be in full screen mode in order to see the chat bar. Maybe that's part of the reason. Alright, so here's IWM, here are the small caps. And again, over the last week, very strong move on the small caps. This is actually very welcome and something that's very important, because it shows that, you know, money is comfortable right now with flowing to riskier assets. And that's critical, right? Because this has been a market that has been very hesitant to accept risk and to tolerate risk. And the fact that we're seeing the small caps start to play catch up is really important as far as the longer term strength of the market. We did a really good job of staving off what could have been a pretty ugly breakdown in May. And we've done a good job of breaking out, filling gaps, retesting and holding support levels. And much like the Dow Jones, despite the fact that it's been so strong recently, I think we're reaching a point now where we are starting to get to rarefied air that I don't know that we're ready to break through. Again, taking a look at where we are, here's that same little bear flag rising wedge that we are basically fighting on most of the indices, right? So I'm going to go back to the SPY for a second. You look at the S&P 500. Oh, okay, good. Do me a favor, whatever ticker you were asking for on Twitter, go ahead and put it on here again, because I don't have Twitter up right now, okay? So just type it in the chat. All right, so here is the same rising wedge, basically, or bear flag, however you want to call it, right? We had the drop, and then we had an attempt at a bounce. That's what the S&P 500 is contending with right now, right? The Dow Jones is contending with the same area. IWM is contending with the same area, right? The only one that's really left it in the rearview mirror is the Nasdaq. As you can see, this is that same area. You can see we're way past that, right? So most of the other indices are still struggling with that. And the IWM in particular is the least likely to actually break above that point. We're still about 7 points away. We've got the 200 pair moving average here, and then 152. And I expect IWM to find some strong selling pressure as we hit this 200 pair moving average. So again, this leads to this idea that maybe we have one more attempt at a run higher from the Qs, and most of these indices are probably going to follow suit. But as you can see, they all have very strong overhead resistance, and so that is one of the reasons that as we've hit the middle of the week, I've gone from, I was pretty bullish at the start of the week, and with the bounce that we've had and the move that we've had in the last 3 days, I'm not bearish yet, but I'm starting to change my outlook to more neutral and more cautious again. I'm starting to look at taking profits on names as they come up and hit into resistance levels. And so that's going to be my thought process as we close out this week, is trying to figure out where this market is going, and when it actually does hit that ceiling, making sure that I don't hold on to the bag here and hold some trades as they reverse course if the market does eventually turn right back over. So that's the four major markets as far as my look at them and what I'm expecting. At the moment, it's still better to be bullish than bearish, despite the risk reward. There are names that you can find, and we'll go over a couple of them that I think have good risk reward. Fat Boys is asking, one of the swings he's asking for is one of my Patreon suggestions. So I'll show you guys what kind of trades I've been looking at this week. and you'll see that there are good risk reward opportunities that are still present in the market, despite the fact that the market itself is not offering good risk reward. So we'll get to that in a second. Before we do, though, let's take a quick look at the U.S. dollar, and then we'll look at gold, silver, and oil. Now, interestingly enough, the U.S. dollar, we discussed this last week, this possibility that the U.S. dollar was ready to break down. It's been losing momentum for a while now, and you can see we had a pretty big drop, and a lot of that is because the euro finally had some real strong moves versus the dollar. So here's a look at the euro USD cross. In this particular chart, up is good for the euro and bad for the US dollar. So you can see the euro really broke out and made a strong move upwards. Really big move, showing weakness in the US dollar. I think it's reaching a point now where this move should be getting close to an end. Not yet, but pretty soon we should start to see it start to falter here. But it shows, again, a very big change in character for the U.S. dollar. The U.S. dollar also lost a lot of ground versus the Canadian dollar. And you can see in this case, again, this one is actually, up is good for the U.S. and down is good for the Canadian dollar. And you can see that the Canadian dollar basically gained a lot of ground versus the U.S. dollar. Now, this is partly due to the fact that oil continues to strengthen in its price. But some of it is just due to basically the weakness in the U.S. dollar. Now, the one case where the U.S. dollar is still showing strength is versus the yen, and this is in part due to the fact that the yen, the Japanese people or the Japanese government has started to do its own stimulus now, and so they're going to devalue their own currency, and at this point, it's starting to lose ground versus the U.S. dollar. So this is the one bright spot for U.S. dollar bulls. But generally speaking, the U.S. dollar is starting to lose some ground versus other areas in the world. All right, and so that leads us. I'm going to go to oil first, and then we'll look at gold and silver. Again, oil. This chart is going to be very difficult for me to really analyze for a while. So what we have to do in this case is go to a 4-hour chart and just kind of take a look at what's happened over the last month or so. Now you can see the U.S. Oil continues to gain strength. Again, this shows that the market is anticipating more of a return to normal than maybe we are, right? It's anticipating an increase in energy demand, anticipating more drivers, anticipating more companies opening up, and because of that, oil prices continue to kind of climb. We're getting close to 40. I think 40 is going to be a critical point, and that might be a ceiling. I think that we're actually reaching a ceiling now, but there's a little bit more room to the upside on oil before we hit some major levels of resistance. And we'll see just where we go and what the new normal is for oil. But right now you can see that basically the market is pricing in, I think, a broader and stronger recovery and return back to work than maybe what a lot of people are and a lot of traders are. All right, so let's take a look at gold and silver. You're asking me. So one of the questions you're asking me is on gold. Now, my question for you: are you asking about the commodity gold, or are you asking about Barrick Gold, which is the ticker GOLD? So let me know which of those two you're asking, Fat Boys, and then we'll go. But I'm going to go into GLD first anyway. I'm pretty sure you're asking about just gold, the commodity, but oh, you're asking about Barrick. Okay, so we'll get to Barrick in a second. So here is GLD. As you can see, gold prices lost some ground. Now, this is interesting. This rarely happens, but we had the U.S. dollar lose value, and we had gold lose value, both at the same time. When something like that happens, it means money's flowing into stocks, basically. And I think that's one of the things that we're seeing happen right now, is that we're actually seeing people start to accept risk again. And so they're taking their money out of some of these safer assets. Right now, again, it's only a 2 or 3 day pattern. This isn't some major broad pattern we're seeing a big change in behavior, but it is something to keep an eye on. I think gold is still in a pretty bullish chart pattern. It's coming up into strong support here, and it should find buyers stepping up here. You can see we're testing the 50-pair moving average today, as well as a pretty decent trend line. A lot of times when you have converging potential support like this, even a horizontal level down here, 158, that's 3 different potential areas that can offer support. So more likely than not, we will find support on gold over the next week. It might try to push and break below them, but more likely than not, we will find buyers eventually step up and support gold here, and at least lead to a potential bounce higher. All right, silver showing some relative strength in the short term. Long term, it's still much weaker than GLD, but in the short term, it's you can see what it's done here the last couple of days. It's pulled back just like gold, but it's still holding up around its breakout point rather than at the bottom of its base, right? So it's still doing better. Again, near a level of potential support here. So we see a reversal pattern and then or a support pattern in the next couple of days. It could lead to a move upwards, and so that leads us to some of the gold miners like Barrick Gold, right? Gold and the so Ray, you're saying gold and the SPY have been following each other for months. Gold and the dollar. Yeah, gold and the dollar have been trading somewhat closely actually for a while now, but it's not always the case. All right, so looking at gold miners, the first thing you should notice is relative to GLD, they're actually weaker, right? So we're going to go ahead and put some trend lines up here. First thing you'll notice is that Barrick Gold lost that level of support, and then they printed a bear flag, and it broke down below that bear flag, right? So generally speaking, Barrick Gold is behaving much weaker and much poorer than actual spot gold, right? So we go back and look at gold. You take a look at what's happened since February, right? We had this nice little move, this bounce, and then we had this base form out, or this triangle, and then a break above it, and this last pullback came back to support it, right? Now we look at Barrick. Again, what is it doing now compared to where it's not quite in the same place. Now that being said, if we go back and take a look at the March prices, we're still kind of above a lot of that, right? So next thing we want to do is figure out where the next level of support is, right? So we've got this potential area, and then we've got this, right? And this is just basically some horizontal support. Alright, so here's basically my look at Barrick Gold. These trend lines, I think, tell you the full story of what you need to figure out on it. It had a big breakout. You can see we had back with the whole coronavirus thing, we had a bearish trend develop. We broke that trend in April. We're able to kind of sustain it for about a week and then really exploded to the upside, right? Now, coming back into these areas, this area around $20 is really important. And then this area around 22 is kind of important. It's not a major level other than it being the top that we had back in February. That's right back where we are right now. We should find support here. So if you're trying to figure out what it's going to do next, it should probably find some support here. Now you're asking about Barrick Gold as far as long term is concerned. So now that we have an idea of what it's doing, let's go ahead and take a look at it from a longer term picture and see where we stand and what it's done, right? And so as you can see, if you're looking to enter this, I don't know if you've already bought or not, but if you're looking to kind of scale into Barrick, well, we've already identified our buy points just by looking at the chart and what it's done recently. The first buy point is actually right around now. Now, I wouldn't go ahead and enter a full position here because there is definitely room to the downside, and we're seeing an erosion in price action. We're seeing, you could see that it had trouble holding a base, and then it broke down. The bounce was very temporary, and then it kind of broke down again, right? So there's a very good chance that it kind of supports here and tries to make its way back up. So as it prints another support candle or two, this is not a bad spot to get some, to start to scale in. But you might want to leave a little bit left in case it comes back down into the $20 to $19 range, at which point you can kind of average into it a little bit more, okay? So you bought some today and you will add. All right, so that's the plan then, right? Basically look at this level around 2250, and then the next key level to look at is around 19 or 20. And then I don't expect it to fall back below that. I think, again, gold is still showing some good strength, and I expect the gold miners to follow suit at some point, even if they're not doing that right now. So if we look at GDX real quick, You can see GDX. And GDX actually, relatively speaking, is a little bit better than, well, I guess not better than Barrick, but pretty close to it. Uh, it's still testing that same level from the 24th of February, just like Barrick is. All right. So let's take a look. What else did you want to look at? You want to look? All right. So one of the ones you're asking about is Francesca's, which is one of my trade ideas for Monday. Um, so here's a good idea as far as, so those of you that are wondering where the risk reward is. So I think retail stores and restaurants in particular are starting to gain some strength. And it's an area that I think offers good risk reward. So we were looking at this on Monday. Now we were actually hoping for it to hold above 319 to give us our entry. It actually dipped below that, but then today's candle, you could see the big explosion. Once it was able to break through yesterday's highs, it signaled a really good entry point. And so if you're in on a swing on this, what are you looking for? Well, I think ideally it already actually hit a profit target, which is this level right around 375, 370, 375, 380 as it broke out. Now that's pretty quick, right? But if you think about it, if you entered somewhere around 320, you've got a stop that's maybe 20, 30 points away, and you've got a move up here that's 30, 40 points up, right? So I think it's going to push through this. I think as because of the strength that we're seeing in the recovery we're seeing in retail stores, it probably wants to push upwards and start to get into the $4 range, 5. I think ultimately what I'm looking for is 5, but a lot of this depends on how the market behaves over the next few days. Like I said, I'm a little bit leery that the market is starting to hit its price ceiling, and if that's the case, some of these names that are now starting to gain some momentum, they might struggle. It doesn't mean it's going to break. It's trying to head back down. I think we've got a good stop point now for this, depending on where you want to stop out as far as whether it's your entry point or whether it's down here in the 280, 290 range. But I expect it to come back up and test 390 to 4. And then ultimately, if it can get back to 5, I'd be very happy with that. I probably would take profits if I was trading this myself. First stage to take profits is right around 370. The next stage is 415 to 420, and the last stage is 5. Okay, and that would be the way I'm trading it. Okay, but generally speaking, you can see the risk reward. Now, the other one that we had that is working well for me is McDonald's, right? And again, for anybody, those of you, these were some of my trade ideas. Oh, so you entered at 308, so that was a pretty good entry. So this was another one that I was looking at. And again, you can see the risk reward and what we're looking for here on McDonald's. And again, I think restaurant chains are doing well also. You could take a look at others that maybe haven't followed yet. Something like Shake Shack is still kind of in the process of breaking out and kind of moving off of this bull flag. You have something maybe like Cheesecake Factory, which had a really big move today. So I think generally speaking, retail, if you want to look at some retail stores, well, Best Buy has been doing good for a while, but Bed Bath & Beyond is another retail store that broke out of a nice little bull flag. So there is momentum coming in here in that space, right? Macy's, I think, another name that's starting to pick up some steam and starting to really move forward. So there is, if we're following where the money's rotating, I like what Francesca's Holdings is doing here. And I think that it has potential for a further move upwards. Now, it had such a big price explosion just today that, scaling out of maybe a third of it makes sense when it came up to 368. Because, again, you're making 60 cents right away in one day on a $3 stock. That's a pretty nice move. And then, again, you still have potential for it to kind of move forward and start to hit some of these key areas. And like I said, I think the ultimate target here is probably 5. Will it get to 5? Maybe, maybe not, but that's why I scale out. That's why I start to scale out a little bit before that, okay? And same thing, McDonald's. I think McDonald's is doing well and likely has a few more days of upside in it. We'll see where it goes from there, okay? So those are, again, showing you there is risk reward out here. There are stocks that have broken out and are pulling back to support and are looking to start making new moves and kind of move through there. So despite the fact that the market is actually not showing us good risk reward, there are names that money's flowing into that are giving us good risk reward. Now they are in beaten up areas of the market, so you want to be quick about taking profits, and that's part of the reason that I recommend something like maybe scaling out at its previous level of its previous highs, and then as we move forward, just as you can see just the price areas on the stock that should present strong levels of selling, and it makes sense to scale out as we hit them because we don't know when these things are going to reverse. If we get news and we get wind of a new round of infections coming in from all these protesters, then these names are going to get hit right away because people are going to be anticipating stores closing again. So right now the market is anticipating them opening and them staying open, and that's why they're bouncing, right? But I'm going to be quick about profit taking because I don't know that we're completely out of the woods yet, where I could just kind of trail a stop forever. I think at this point I'm still in profit taking mode, and I'm going to be taking profit on these as they hit what I consider to be good levels of resistance. So the other one you want to ask me about is Avis, right? So CAR. All right. So now my question is on this one. What are you asking about? Obviously, I'm hoping you're not asking about an entry because at this point, this is basically the market in a synopsis of where at this point the risk reward does not favor entering at all. I'm assuming you're looking to take profits, but let's take a look at what it's done. Again, an area of the market that was kind of beat up because people aren't traveling, and only now they're starting to. All right, so if you're looking for a pullback on this, I think we just identified it for you, right? So here is what was a pretty important price point, right around $19, right? You can see we came up and bounced there in March and failed. Then we kind of came up and fell short, came up and fell short. Then we finally were able to kind of break out above it. We spent 3 days confirming that breakout, and now we've made our way all the way back up to the 200-day moving average. If you're looking to buy a dip on this, I think the obvious area for a dip buy is when it comes back to 2019. Somewhere in that area around the $20 or $19 price range. This would make a really good retest of a breakout sort of a buy. If we look at it on a weekly chart, you can see where we stand now compared to where it was before. So, it hasn't recovered all the way. And I think that's the key. That's the key with a lot of these retail names, retail stores or restaurants or travel companies, is, you look at them and you say, well, they shouldn't be bouncing, they shouldn't be recovering. But the truth is that they're not all the way back to where they were before this all started. They're only about halfway. So it makes sense that if they finally are starting to get back to work and getting back to business, that they're going to make some recovery. And so you can see that's where we are right now. We're just starting to make our way back to what was the bottom of its previous range. Now it's a little sloppy on Avis, but if we come back and we just take a look, here's a much longer term view of it, right? And you can see this level right around 21 was pretty important a while ago, right? So that's another area you can watch. You can see we're breaking through there. We've made our way all the way back up to 26. Next kind of a key area here, there's a lot of price action right around 30 to 31. You can see up here, it was the ceiling, and then it was support, and then it was support that failed, and then it was, again, resistance that we broke through, and then it was support that failed, and then, again, we just tried to go back through that level. So if you're looking for an important price point for it to reach, I think 31 or 30 is probably the near-term ceiling as far as what it could get to. But if we're looking at buy the dip area, then we're looking at somewhere around 21, 2019. Okay? And you can see, again, those levels kind of play out. You can see that 21 was what kind of stopped it in the first breakout, and then it finally was able to push through there. So that's how I look at Avis, and that would be my idea of how I would go ahead and try to trade it. Again, I think part of the problem I have with it right now is that it's already moved forward, and a lot like what I'm seeing out of the markets, it's starting to hit levels of resistance that I don't think it has the momentum to push through. So I'm not excited about trying to buy long here. But if it does, if we do pull back and we still see signs of a recovering economy, then this will find support around 20, 19, even maybe 21. and you can look at it as a buy the dip opportunity then. Once it comes back and kind of retest that it is ready to move forward and continue to climb higher. Okay. All right. Anyone else have anything they want me to look at? Now, one thing I want to point out is we were discussing possible, if the market does pull back or it does reverse, what am I looking at, right? So, we still have the airlines that I think are still struggling, right? You can see there, it's very nice bounce today on Boeing, right? But if you take a look, there's still a very major level of resistance that it has not come up to, right? So if we do see a bounce in the market over the next couple days as the NASDAQ tries to hit new highs, and then we finally start to see a reversal. And like I said, I'm not interested in trading, or shorting tech names, right? But if something like this comes up to 188 and starts to show a reversal pattern, then, that might be where I want to look at shorting the market, right? Maybe something like American Airlines. Again, you can see very far away from support. Maybe you want to look at something like the cruise lines. And you can see they're actually starting to deal with critical support. There's also stuff like this, these industrial names that are coming up and hitting some major support levels. Now, the way the market's reacting and the way the market's behaving right now, these names there is a chance that these names break out. But if we see a reversal, we finally see a top in the market, these are some of the first areas you maybe want to go to when you're looking for a short trade. Maybe you look at something like movie theaters, right? Maybe you look at AMC and you wait for a break of momentum here. I don't know, it's difficult to put the ceiling on, or the top of this, because we have this big gap up, but, it could be up here. But generally speaking, once we see that break of momentum, maybe this is something you want to look at. So there are still weak areas in the market, right? And they're still kind of struggling. And if I finally see a market change in price, in character, and see the price behavior change, then those are some of the areas that I'd look at as far as shorting. But for the moment, I'm not looking at that. I'm still looking at these names. Like I said, some of these restaurants, some of these retail names, they're still showing a lot of recovery, and that's still the area that I'm really focused on. Another thing, we discussed this last week. A lot of these work-from-home names have had recoveries, and we discussed the fact that they could bounce. And you can see Zoom had a huge move up off of its earnings report, and bounce into the earnings and through it. Citrix made a nice recovery, even though it kind of gave back some of it over the last couple of days. But Citrix had a really nice recovery as well. So there's still some buy the dip opportunities in some of these names that benefit from working from home as they come in and start testing support levels. And that's an area you still maybe want to look at if you're looking for risk reward that is improving. And if the market does continue to rally, then we might see some momentum come back into some of these names like Amazon. Amazon's not doing too bad, but some of these work-from-home names, again, Amazon actually did bounce from what we were discussing last week. So, you just have to kind of make sure that you're paying attention to what you're doing right now because, the market it's trickier than it's been recently. But I think we've hit a really interesting spot where picking a stock makes a difference. There's a lot of times when a market is moving strongly in one direction, whether it's up or down, where picking a stock is not that important because everything's moving together. But we've reached a point right now where there's a lot of money flowing back and forth, and a lot of stocks are doing different things. And this is where you need to be disciplined and make sure that you aren't chasing price action, and you're instead anticipating where the money's flowing to and trying to take advantage of that. Okay, so I think that covers it for today. If you have a chart request that for some reason maybe you couldn't figure out the chat tab on Twitch either, you can always ask me on Twitter, and I'll be more than happy to answer it. Or you can visit us on our Discord. If not, hope you guys have a good rest of this week, and we'll meet again next Wednesday.